And the other thing to think about is this is actually the best time to invest after a crisis. And if you look at the returns for venture, for the decade coming up to the last crisis, so 1999 to 2008, the average return of venture funds was 6.28%. And these are numbers from Cambridge Associates, one of the most respected advisors out there. And then in the years 2009 to 2015, the returns tripled to 18.21. And that is our strong view, is that over the next 2 or 3 years, there's going to be some great opportunities to buy things at much cheaper valuations than we were seeing, a year or two ago when everything was at record highs. The whole world was perfect.
Yeah, I mean, that's total sense. I mean, and again, this is still early phase. So the ability to be able to pick up cheaper investments in the space, if you're right about the macro view about where this is going, and obviously I agree with it, we don't get many of these opportunities in our lifetimes, is my view. I've not seen risk rewards like this ever.
Yeah, that's why I'm all in, is that, like you say, this is a call option on the future payment rail of the world. And yeah, could go to zero, but could go up 10x, right? And you just don't see those trades but once in a generation, right?
And what do you think is going to happen to all these central bank balance sheets at the end of this? Because if this goes on a bit, they're going to have to do extraordinary amounts. And that obviously should help Bitcoin in the end. What's your view on that whole situation?
I lived in Japan. I was trading interest rates in Nikkei back in the early 90s, and they had overnight rates at 6%. And then they had what they called the Japanese recession, which was sub 3% growth. And then, it was a real one. And they invented zero interest rate policy, ZIRP. They called it the lost decade. That was 25 years ago, right? Like, rates, I think, are going to be zero for the rest of our careers, right? So with that, with no more monetary policy as a lever, then you have to start extending what kind of assets you'll put on your balance sheet and how much money stock to create. And we've seen the first fiscal stimulus package the U.S. Congress passed was $8 billion. That was about 3 weeks ago. Now we're at $2 trillion. And there's a great line attributed to Senator Everett Dirksen: $1 billion here, $1 billion there. Pretty soon you're starting to talk about real money. $1 trillion here, $1 trillion there. It just has to have an impact. And we're already seeing it. The intended impact's already helping the S&P be a lot higher than it would absent that stimulus package. Real estate doesn't have any real-time pricing, so it's hard to see, where that is. But, it's obviously higher than it would be had the $2 trillion not been allocated. And so I think you're going to see it in all kinds of other assets, cryptocurrency just being one of them.
Yeah, I mean, gold is the other one that people focus on as well, that, it's traditionally done well in these kind of markets when the value of money broadly falls because there's excessive amounts of it.
Yeah, and crypto is up a lot from its low on the 12th or 13th. It's already up, 40% or whatever. So you are seeing the impact start, but I think over the next 12 months, you're going to see it, more fully get priced in.
Yeah, I mean, I'm personally, accumulating as much crypto, Bitcoin as I can right now, just because I too believe that within this, the hard money elements of Bitcoin, even discounting for the volatility, but looking at the risk reward, makes it an extraordinary opportunity that I've literally never seen before. And as you know, I've been involved in this space on and off since about 2012. And, I just don't see any other outcome. I've never, even for gold as well, I think, look, gold can go up 3 to 5x. Bitcoin can go up 50 to 100x over the next 5 years. And that's, you don't see a whole asset class go up 100x. But you've seen it because you've been involved from the beginning, I guess. And also, how do you deal with the volatility? When you first got into this, you're not used to taking 90% drawdowns, but now you are. Talk to me a bit about that.
Oh yeah, no, it's hard. The market's super crazy. It goes up 1,000% and down 90%. It's already done 2 huge round trips since 2013 when we launched our fund, and a couple big ones in the year or two prior to that when I was studying it. what I try and tell our investors, and I try and tell myself, is even though it's basically venture with a real-time price feed, right? You're investing in a very early stage project, but they're tokens that trade, on little apps, every 2 seconds. So what I like to tell people is, although our Bitcoin fund offers daily liquidity, you should invest with a 5 to 10 year horizon and try not to look at it. And it is true that for anyone that's ever bought a Bitcoin and held it for 4 years, they've all made money. So, if if you can do that, that's great. Unfortunately, human nature is very pro-cyclical. And I'm like many others, is when it's going up, it feels great and you feel so smart and, you feel like you don't have enough. And then when it's down 80%, you're super bummed and you're trying to, rationalize why you ever did this stupid idea anyway. So my only suggestion to people is try and think about it in a 5 to 10 year time period, and only put in as much as you can afford to lose, because there is a chance it all goes to zero, but there is a chance it goes up 10 or 20x. So try and stay focused on the super long term. And then we've seen in our own inflows massive pro-cyclicality. A huge fraction of our inflows come in at the highs, and very, very little comes in like right now when the market's way down. If you're an investor and you have the emotional and financial resources to invest, you want to invest at the lows and then, potentially scale out at the highs rather than, having the FOMO devil whispering when it's at 20,000, and getting in.
And you must have a kind of a wry smile on your face when you see one by one of our kind of old friends, the old macro guys, all coming across to you, whether it's John Burbank, whether it's even Dan Tapiero, whether it's, Alan Howard, Jim Pallotta, you name it, one after the other is basically crossing the Rubicon and going into this new world. You were the leader in that by a long way, so I'll give you credit for all of that, but it must make you laugh a bit.
Oh, it's great. No, it's great. It's all the old same friends of mine. Like, Mike Novogratz and I have been palling around for 35 years and we're still doing it. It's hysterical. But I think it's because our job has always been look for big global disruptions. And man, this is disrupting global payments, remittance, gold, and it's disrupting money. And money's a $100 trillion market. Now it's $102 trillion. So it's not surprising that it's a bunch of, global macro investors that are the ones that really, really are embracing this.
Disrupting money. That's I've not really thought of it that way, but it is disrupting money and the whole system of it.